Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is at current 5:07 in the a.m. Eastern Standard Time. Let's do a rundown of what we'll be discussing this morning. First, we're going to kick off with some members' stock chart requests and charts that we're watching for possible trades, as well as a deep dive into the pre-market activity. So let's get to it. The first chart up, MBT, Mobile Telesis Systems. This is an interesting chart because the first thing that jumped out at me when I started looking at the chart was the RSI. As we were proceeding to new higher highs, what was RSI doing back here? It peaked out in January of 17 and just continued to put in higher lows. And once we broke down to new lower lows, the damn doors just busted open. And here's where we see ourselves now. Now, we did bounce off of support back here on the week of the 13th, then again a retest on the 20th. And we have a follow through the upside this week. Now, this is not my favorite support level. You can see that we've been here before. We have broken to head down to this support level here at the $7 per share level. And this support level has acted as support and resistance before. So where we bottomed is not necessarily my favorite. It may hold for all I know. But what I'm concerned about here is the inability of the shares to close above this support level at current where it is trading. Also, you have the 200 period moving average, which is acting as the declining ceiling. So that's a bit of a concern. That's a headwind in front of the shares. And as I always like to say, weak stocks tend to get weaker until, of course, they don't. They break trend and they begin to move in the opposite direction. Daily chart, MBT. Now, again, we bottomed out. We rallied yesterday, a new weekly high. We did not clear resistance at $7.80. So I wouldn't buy these shares until we were able to put in a new closing high, meaning we could rally above $7.80. But unless, of course, at 3:59 Eastern Standard Time, it doesn't appear that we're going to hold that support level. I'm not interested. Because as I always like to say, it doesn't matter where a stock trades intraday. What matters is where it closes, right? Because where it closes will imply where it will probably head in the coming days. Now, RSI looking good. Rising, higher lows, good stuff. Next chart up. CNAB, United Cannabis. Weed stocks are in fuego. We had a strong bottom. We bottomed out here on the 17th of August and then rallied. We broke out above this upper band of resistance. We have now pulled back. Yesterday, we did a successful retest of the breakout point. So while it appears as though we have come pretty far, pretty fast, I think there's still more upside here for CNAB and the weed stocks. So choke up. Good volume yesterday. RSI putting in higher lows. Looking good. So CNAB I like. The next chart up, BILI. A very, very interesting chart. We're going to go over a daily chart as well. On a weekly basis, there's not much data here. We are in a tight triangle formation so far this week with only one day in the books, being Monday. We can't make the assumption that we will close up on the week, but we're looking good. Now, looking at a daily chart, this is sexy. This is really, really nice stuff going on here. Let's begin with the RSI. The RSI broke out here on the 17th of August, rallied, pulled back, new higher low, and then broke out again yesterday. Now on price, we broke out here on the 20th, rallied, retest number 1 on the 23rd, retest number 2 on the 24th, being Friday. Yesterday, we rallied. What we're looking for here is a new weekly high, and I'll take you back to the weekly chart. Ideally, we see a close above this upper band of resistance. If we get that, it's game on to the long side for these shares. Good volume yesterday. So I like these shares as a long, looking good, quite bullish, despite the fact that we have been very weak. We are seeing signs of accumulation here. Exact Sciences, weekly chart. No new weekly high yesterday. A very powerful week last week, but no follow through yet. Why? Resistance above. No breakout yet on RSI, but we are seeing higher lows. Now all we need are higher highs. Good volume last week. Daily chart. Now on a daily basis, we cleared a resistance level last seen back here on June the 18th. The next target is to clear $74 per share. Good volume over the course of the past several days. I think that if we clear last week's highs, it's game on to the long side for Exact Sciences. Very bullish. Interactive Corp, weekly chart, getting a bit extended here. And while we made a new weekly high so far this week, you saw some sellers move in, and I spent a lot of time on Market Wrap last night talking about signs or signals by the market that stocks are getting tired, that you're seeing profit takers move in. And you may be seeing that on a daily chart. It's not quite reflected yet on a weekly chart. Here's the daily chart. Now, we broke out on Friday. Yesterday, a continuation breakout. But even on Friday, you saw a bit of profit taking as the shares closed off the highs of the day. Now, yesterday, we rallied again, new weekly high. However, it couldn't hold those gains. It gave up quite a bit of them. It still closed up by over a half percentage point. That's good stuff. But once you begin to see a trend of topping action, take heed. If you have a decent profit, book some profits, because in all probability, you're going to get a pullback soon. Perhaps it's a retest of the support level. Perhaps it's a failure. Who knows? Make your profits real. Make some of them real anyway. Zuara, ZUO. I love this chart. Not much data to go by here, but we have a nice cup with handle formation forming or formed, and we have broken out above this pivot point here at 30.88. Now what we're looking for is a continuation push higher to clear 37.78. Once it clears that resistance level, it's game on. Now, do you need to wait for that level? No, I think that if you wanted to put on a very small position, one that if we begin to pull back, you get stopped out, it doesn't hurt you, that's fine. I would be far more aggressive with my buying on a rally and a close above 37.78 because in all probability, we are going a lot higher after we clear that resistance level. RSI, higher highs, higher lows, same deal here on Stokes. So you have momentum at your back. The shares are looking good. How is volume? Volume, rising sequentially. This is what I talk about all the time. You want to see when a stock is breaking out of a cup with handle formation or a bull flag formation, whichever one you want to pick up on as being your chart pattern of choice, you want to see rising up volume and a breakout on increasing up volume, meaning rising sequential volume and volume on a breakout, which is above the 3-month moving average. Check the box on those metrics. The chart is looking good here. So I like the shares. Let's segue over now into the pre-market activity. Let's kick things off with the U.S. dollar, which has come under quite a bit of weakness over the past week. Now, why are we seeing such weakness? Well, the economic data of last week was not the best. Then on Friday, you had Jay Powell come out, and he was singing the praises of Alan Greenspan, who kept interest rates far too low for far too long. And the markets are reading into his comments as being dovish. So if the Federal Reserve is going to be more accommodative, well, then that's dollar bearish. And if you have weak economic data, along with a Federal Reserve that is going to be accommodative, you're going to want to look at charts of gold and the gold miners and silver. We'll get to those charts in a moment because it's a better environment for them to begin to outperform. We've spoken a lot about them. We'll go to them in a moment, but let's take a look at the dollar first. We peaked out here on the 15th, lower highs and lower lows. Overnight, we did put in a new daily low, but we bounced off of this support level here. If we break, the next support level is right here, 94.65. So watch for a break here on the dollar. Now, going to a chart of gold. Gold is up in the pre-market about $3.70. We have a new daily high so far. I think that we could rally up to 1,224.90, perhaps even this week. The chart is looking very strong. We're seeing higher lows and higher highs. RSI confirming the move higher. No bearish divergences. Looking good here. I think we're moving higher on gold, lower on the dollar. Silver breaking out. You can see that we put in a W formation. Right? We bottomed out here on the 15th, much as we did with gold, rallied, peaked out here on the 22nd, pulled back, put in a higher low. Here is that lower band of support. We'll go with purple today. Okay? Now what we want to do is represent the pivot point here in purple as well. Okay, we broke out above the pivot point on silver. So we're moving higher here this morning. Does it open up at these levels? I think so. I think it probably does. So silver looking good. Bitcoin. Last time I looked at Bitcoin, it was on the move. Up $185 on the day. I think we're moving higher here on Bitcoin. We began talking about Bitcoin back here, and it has broken out of a tight formation. It looks as though we are moving higher here. RSI looking good. Nice double bottom setup here off of support. I think Bitcoin moves higher. Taking a look at oil. Oil is on the move, up nearly 0.75 percentage point on the Brent price. A very strong chart here. Very, very strong. So members will be looking at energy today. Taking a look at the 10-year Treasury note. We saw yields pop yesterday, and the 10-year note, while it moved higher overnight, we gave up support yesterday. We're trying to recapture that support level, but honestly, at this point in time, this may change by the open. It's not looking good. We're reversing off of what was support is now resistance. What does that mean? It means that yields could press higher, especially if we break down below yesterday's lows. And you can see here that RSI had been signaling weakness for a while now. This is not what you want to see, meaning price moving higher with RSI moving lower. Not good. No bueno. So that is a bearish divergence. So I think that yields, despite the fact that we're up this morning, actually we just went flat. I just said yields. I meant the note. I think the note is moving lower. I think yields are moving higher today. So while we're at still very accommodative levels on the 10-year Treasury yield, this market is getting a bit expensive. And if you see a significant break in the 10-year Treasury note and a spike in interest rates that may cause a bit of headwinds for the markets. The markets will let us know when yields are too much for it to be acceptable. So until then, it's still game on to the long side for this market. The S&P 500. So what we're looking for here is a bull flag setup. All right, so here you have it. 4-hour chart. It appears as though we are going to get a continuation breakout, unless, of course, we don't, right? If we break down below this lower band of support on a 4-hour chart, I would consider lightening up on long positions, make some profits real. RSI still making higher lows and higher highs. The Dow Jones, it hit a bit of resistance yesterday. So expect some consolidation here. The large caps, given the new agreement with Mexico, they should begin to play catch up with the small caps. I went over this with members last night on Market Wrap. I'm not going to rehash it right now, but the small caps are showing a little bit of weakness relative to the large caps. And I think that as trade disputes are resolved, you'll see the large caps begin to play catch up, unless, of course, yields begin to spike higher, and that just begins to dampen the market's enthusiasm. Let's leave off with a look at the RUT, the Russell 2000. At the RUT, the Russell 2000, we saw a bit of profit taking yesterday. We came off the highs, and we saw a bit of weakness into the close. So just beware of the headline risk on the small caps, and the headline risk being a resolution to trade disputes. That will not bode well for the small caps, which have benefited from the trade wars because they've had less exposure, right? Their profits and revenues are mostly domestic based, so they have very little exposure to the trade wars. But again, as they get resolved, the money will begin to rotate into the less risky large cap names. And that's it for this morning, folks. Everybody have a profitable trading day. Don't forget to hit that subscribe button, please. Give me a like, share with a friend, and click that bell if you watch this on YouTube. Leave a comment. I will get back to you. And again, everybody have a profitable trading day. Be well.